Hello everyone, welcome to episode 4 of this series. I'm going to be covering inversion PD arrays. I'm going to walk you guys through a checklist on how I utilize inversion PD arrays. Let's first start off with which PD arrays can become inversions. And before we even get into that, what's a PD array and an inversion? That may be your first question. A PD array is a premium discount array. ICT has labeled it the premium discount array matrix, and those are things like fair value gaps, order blocks, propulsion blocks, mitigation blocks, things of that sort are classified as a PD array. It's just a label for those specific signatures and price action. Every single PD array can become an inversion. You may ask what an inversion is. I'll show a little example right here. Let's say you have a bearish fair value gap, and that is classified as a SIBI, a sell side imbalance, buy side inefficiency. So you see something like this on the chart. Normally, right, if the draw on liquidity is lower, what do we anticipate for? We anticipate for price to return back to these and then see price expand away from them. An inversion is when the draw on liquidity is higher, price will break above the bearish fair value gap, retest it as support, and expand higher. So inversion PD arrays is when the normal function of a PD array gets inversed. It's that simple. So if a bearish fair value gap usually gets retested as resistance and trades lower, it does the opposite of that. It breaks above it, retests it as support, and trades higher. Now, how the heck do you know if that's going to happen? That's what this video is about. And I'm going to go over anticipating inversions before they even are inversions. So there's multiple ways that we could utilize these. So the next thing I have written down is using inversions as feedback from the algo. So we can utilize inversions to measure order flow. We want to see which PD arrays are being disrespected. And once we get that and we can gauge a draw on liquidity, which we talked about in episode 3, we can hunt for lower time frame setups out of these inversion PD arrays. And you will see change in the state deliveries occur within PD arrays from the sell side of the curve if price is on the buy side of the curve. We're going to be diving into picture examples and real chart examples, so stay tuned. The last thing I have written down is anticipating inversions, knowing which PD arrays will get cut through, picking the right PD arrays to hunt for lower time frame setups out of. So I want to dive into the first thing I have written down here, which is which PD arrays can become inversions. I said every single one of them. ICT did say this in a live YouTube video before. He said, you guys are learning that all of my PD arrays can become inversions. So we're going to take a look at what that looks like on a real chart. So we have this bearish fair value gap right here. Okay. You can see that price broke above it, retested it as support here, traded higher. We do not trade, or I shouldn't say that, I do not trade before these high impact news events such as NFP. Why? Because the volatility is just absolutely absurd. And a lot of the times, if you were to even place a sell limit here and then a take profit down here, and you were to capitalize on that expansion lower, a lot of the times you're not getting filled. It's almost like the algo just doesn't allow retail trading for a split period of time just for smart money to take up all that liquidity before expanding in the opposite direction. You can see that during news here, it expands lower, then it expands higher. So when price retested as an inversion here before that high impact news, that doesn't really mean much to me. I want to see liquidity get engaged at NFP, and then I want to see it distribute to the other side and target the buy stops, right? So at this low, it takes out sell side liquidity, breaks higher. This is a bearish fair value gap. If the draw on liquidity is higher and price is going to keep on expanding higher, this is an area where price can refer back to and then expand away from. So this is an inversion fair value gap. As you can see, price took out sell side liquidity. Also, if you do zoom out, you'll see between this previous low and this low, we do have SMT with the NASDAQ. So ES is up here, NASDAQ is down here. If you do study the higher time frame chart, you'll notice that NQ engaged this liquidity down here. So SMT is a cracking correlation between correlated assets. If you do have ES setting a higher low, but NQ setting a lower low, that's bullish SMT. In the bearish example, bearish SMT is when one asset creates a higher high, but the other creates a lower high. In this example, you'd want to trade ES because it created the higher low. This is going to be faster to the upside. And in the bearish example, you want to trade the one that creates the lower high because it's going to be faster to the downside. It's something you could utilize to confirm the trade idea, not something you want to utilize on its own. So when price starts to expand higher, it leaves all of these relative equal highs above. Okay, so we have the engineer liquidity above. When price returns back lower, the draw on liquidity was higher here. So this is not delivering from sell side liquidity, but NQ was delivering from sell side. So I don't need ES to be delivering from sell side. What do I mean by that? Well, usually we're looking for where is price delivering from, sell side or buy side. But if NQ took out the sell side and ES didn't, and it created the SMT, well, I don't need ES to be delivering from the sell side. So this is sufficient. Price starts to expand higher. Okay, when 3 PD arrays break, you likely have the wrong draw on liquidity. So notice how it's cutting through all of these bearish PD arrays in here. You have a bearish fair value gap, bearish fair value gap, bearish order block. That's feedback from the algorithm that price is in a buy program because it's disrespecting some of these bearish PD arrays. When price returns back lower, it leaves all of these highs clustered close together. So that's a likely draw on liquidity. When price returns back to bearish fair value gaps, bearish order blocks, bearish breaker blocks, these things can act as inversions. You can potentially hunt for lower time frame setups out of them. So when price returns to this inversion fair value gap, that's an area where the algorithm can reprice back to and then expand away from. So it tapped into it, started to expand away. It also engaged the liquidity beneath this previous low. So when I see it take out the sell stops, trade into the inversion fair value gap, it's supporting price, and then it starts to expand back higher. We have another inversion fair value gap. So I want to see, if I'm bullish, I want to see price cut through bearish PD arrays. Once it can cut through bearish PD arrays and then continue to expand with down close candles being respected, that is the best sign to me that order flow is bullish. So if I think that price is going to trade lower in here, and then it starts to give me this feedback with bearish PD arrays being respected, down close candles being supported, bullish PD arrays being respected, right? And when I say bearish PD arrays being respected, I mean respected as an inversion. So price is breaking above them like we have here, retesting it as an inversion, and then expanding higher. When the draw on liquidity is higher, this will happen. It will happen. I know it does because I'm in these markets every single day. Price returns back, retest this as an inversion. Price starts to expand higher. See how we have this order block? This is something you want to write down. Old changes in the state of delivery can be utilized as inversions as well. So this is a change in the state of delivery. Price breaks lower with a bearish fair value gap right here. Price breaks above that. Since the draw on liquidity is higher, it'll retest that as support now. So this is an order block to an inversion order block. Price breaks higher. We do have this last up close candle with the fair value gap. This is a bearish order block. Price breaks above that, wicks into it there, expands higher. When price is on the buy side of the curve and the draw on liquidity is higher, these things will be supported from price. Okay, so price is delivering higher here. How do we know the draw on liquidity is higher? Price took out sell stops at NFP, displaced higher, engineered liquidity above, SMT divergence with NASDAQ to support that idea. Plus, when we look in here during the New York session, after 8:30 open, right? That's the news embargo lift, New York time. So that's when I start to hunt for setups potentially. My favorite time to trade is after 9:30, but if the setup is clean, I will trade before 9:30. It'll never be before 8:30 just because I'm not up on the computer before then. So it's important not to just always be on the screens, right? Make your money and get out of the markets. These markets can be a vampire if you let them. Just trying to trade every move, every session. It's just extremely draining. So I kind of set times where I like to trade. I will be talking about the time-based model later in the series. But here we have the draw on liquidity being higher, right? Price referring back to these PD arrays. So when you're anticipating for higher prices, like we are here, since it rated the sell stops, started to expand higher, I'm going to extend these out as I'm looking for the liquidity to be targeted up here. So the next thing that I have written down, what we just talked about, using inversions as feedback from the algo. How about hunting for lower time frame setups out of these inversions? So when we're anticipating for price to trade higher, what you want to focus on, and I want all of you guys to study this on your own chart. Spend a lot of time just looking at it. The more you look at something, the more your mind's going to get used to seeing it, and the easier you'll be able to recognize these signatures in price action. When price returns back to the inversion fair value gap, when it returns back to the inversion order block again, and this inversion breaker, we're on a 15-minute time frame. You can go down into a 1-minute time frame, and when the draw on liquidity is higher and price is going to target the highs, lower time frame changes in the state of delivery will occur out of these PD arrays. This will always happen. It doesn't mean every single time it's going to be respected, but these are places where you can hunt for these models. This is a breaker. I didn't talk about this yet. So we have the last down close candle before price went up, made a high, and then it made a lower low right here. Price broke above that. We're anticipating for that to get respected as an inversion. So if we're going to start off in here, this is at 6 a.m. Actually, I'll start off once it turned 8:30, but I'll just show the example in here anyways. You can see that price breaks higher, trades back down lower. If you were to look at like a 5-minute time frame out of here, you can see that we do get, actually, let's look at like a 3-minute. It's a little bit more clear over here. So when price breaks up, it returns back down to the stops over here, breaks higher, and then creates a bullish change in the state of delivery out of that inversion PD array. Similarly over here, when price breaks higher, it returns back down, creates a change in the state of delivery. Remember, typically if price is taking out buy side like this, I like to wait for at least some level of liquidity to get purged. So this one, right? Notice how over here I waited for it to break higher, return back down to this low, then expand higher. That's just kind of a safer protocol for looking for setups out of these inversions, because you can see like the first one here would fail. Similarly here, it just kind of comes back down. If you had your stop one tick beneath this low, you wouldn't have gotten stopped out. So that'd be like the ideal stop. Price breaks higher, creates a fair value gap, bullish change in the state of delivery, then starts to expand higher. Up here, we have another inversion. Let's go down to a 1-minute time frame because there's no setup on the 3-minute. Okay, price breaks higher, sets a new high right here. It doesn't close above this order block though. Remember, I like to wait for it to close above the high of the consecutive 4 down close candles. ICT, I'm not sure, maybe he uses the open. I have just always used the top and it saved me. Price breaks down lower here, trades back down to this last down close candle, breaks higher, creates a bullish change in the state of delivery. So this is out of that 15-minute inversion order block. Just because I know some of you guys would like me to do this, I'm going to zoom back out. And this is where we were just viewing. So we have the up close candle followed by a fair value gap to the downside. Price breaks back higher out of that in this lower time frame wick, right? Think power of 3. Price opens up, trades lower. We zoom back down into the lower time frame. Price creates these consecutive down close candles, trades higher, creates a fair value gap breaking over that order block. So now I'm not anticipating for this low to get traded to, and I want to see it deliver to the buy side liquidity. So it does that, right? Price starts to trade higher, and it delivers all the way up to the buy side liquidity up here. So that's how you could utilize inversion PD arrays to hunt for lower time frame setups. Now, what about anticipating inversion PD arrays? So we have over here, this was the NASDAQ. If you look in the Discord, around this time, this was January 3rd, somewhere in here, I did post that I was anticipating for the 16,396.5 level. If we look on the 4-hour time frame, that was the 4-hour sell side liquidity right here. I was going to say sell stops. Same thing. We do have these relative equal lows. That was the likely draw. Why was that the likely draw? Well, think about what we talked about in the previous lesson. When price is in a sell program, it's going to expand beneath previous lows. So we have this previous low over here, right? I don't want to take that first sell setup that occurs after sell side liquidity. So price breaks higher, takes out this short-term high right here, breaks higher, trades back down lower, but price takes out the high and then expands lower. And notice how it tried to reverse here. So it tried to create a change in state delivery. Price started to drop lower. That failed. And then you could see when it created this change in the state delivery down here, it left behind all of this engineered liquidity. So not only was it failing to reverse as soon as it took out the liquidity over here, it was failing to reverse. It was just consolidating and continuing lower. Also, when it expanded back higher, it left the cluster of lows. So that was an indication that price was likely to expand lower and then also continue down to this sell side liquidity lower. When price returns back above this buy side, this is when I did post my execution where I took a turtle soup up here, just selling the buy stops. Either way, whether you traded that turtle soup or not, the model showed up here. And what's that model? The change in the state delivery. So since the draw on liquidity was lower, When price takes out buy side liquidity, we look for these inversion models. See how there's just one candle right here, and then it's followed by a fair value gap to the downside. This is the change in the state delivery. So now I'm not anticipating for this high to get traded to. Again, that's the safest stop point for this model. When price trades back higher, let's just say you got in the fair value gap, stop above this high. I had a pretty good entry on this. My entry was right up in there because I was just selling to the buy stops. When you're anticipating for price to head lower and the draw on liquidity is lower and price returns above buy side liquidity and it's a significant level of buy side liquidity, I'm anticipating for smart money to sell to those buy stops. We're not going to dive too deep into that into the series because that is an extremely advanced model, and I don't really want to sell the idea that every time price is above buy side liquidity you could just sell and then be right, because that's absolutely not the truth. And it's going to take a lot of experience to be able to do that. So I don't want to teach something that I know a lot of people are going to fail with initially. Once you have mastered this model for a while, then I recommend you could start dabbling into turtle soups. But this is kind of like the perfect model to trade for any level, any knowledge level. So price returns above buy side liquidity. The draw on liquidity is lower. Okay, this is 2 p.m. So this is FOMC statement. Price trades higher. That first initial move, I'm looking for that to be a Judas swing. So that's more confluence that as soon as 2 p.m. occurred, it kind of just retraced higher, left engineered liquidity. That's a sign that price would trade lower, returns back above the buy stops, change in the state delivery bearish. Okay, that's all I need to see. Now what? Well, now I could enter, put my stop above the change in the state delivery high, and I could target the sell side liquidity below. So even if you got an entry all the way down here, say you got, we'll say like a 1 to 1.75 hour trade, price created the change in the state delivery. Remember, we need a fair value gap. We get that right there, and then it retraces back up. So I'm not anticipating this high, but what can I anticipate now? Anticipating inversion PD arrays and knowing which ones will get cut through. So if we go back to this example, see the bullish PD arrays from this side? I'm anticipating for these to fail. So you'll see ICT, when he takes a short up here, he'll say, I want to see price cut through this bullish fair value gap. And the reason that is because price is in a sell program. We created a change in the state delivery bearish, and it's going to start targeting the sell stops beneath here. And if it's going to be targeting that, it's going to cut through bullish PD arrays. So these can get broken below, and they can be retested as an inversion. And until it reaches the sell side liquidity, these old lows, you're anticipating for order flow to be bearish, and you're looking for bearish PD arrays to be respected. So see how it's cutting through all of these bullish PD arrays. And once you get 3 of these bullish PD arrays that break, it's a good sign it's going to head for the sell side liquidity. Because if you were long here, ICT says if 3 PD arrays break, you're screwed pretty much. So you have the wrong draw on liquidity. So once you see 3 bullish PD arrays break, it's likely to target, or it's likely confirming that it's targeting the sell side liquidity. You can see that we have a bullish order block in here. We're anticipating for this to fail. Okay, so we're anticipating inversion PD arrays. Price breaks lower, retested as an inversion there, trades lower, but then trades back higher. And then if we let this play out, it does end up targeting all the sell side liquidity. So if you do go into the trade executions tab in the Discord, you will see how I took a turtle soup on this. And that was because the draw on liquidity was lower, right? It was failing to show a willingness to reverse at this level of sell side, because it just broke higher, consolidated, and then traded even lower. Left engineer liquidity. When price returns back higher, I don't care if there's liquidity above here, right? This is going to be a key high. Price is just going to target that high and then reverse and trade back lower. So if you guys want to see that, that is in the trade executions tab in the Discord. That's going to be it for this video though. We learned a few things in this lesson. Every single PD array can be an inversion. You can utilize inversion PD arrays as feedback from the algorithm of which direction order flow is. So if you're anticipating for price to trade higher and it's cutting through bearish PD arrays, that's feedback that you're likely on side with smart money, and to see a continuation in that direction. And as you see a continuation in that direction, right, you're